It's Jay Meisel here with the Forex trading outlook for the week of October 13th, 2014. This is actually my third attempt doing this, so I'm trying to come up with a definitive outlook for the week. And it's not an easy one, but it's going to be driven by stocks and equities, and I'm not much of an equity forecaster. I tend to underestimate the up and the downside on equity moves, so I'm not one looking to guess at where the stock market's going. We'll let this play out. But I will say that after a 280 point range from last week, it would not surprise me to see some choppy consolidation, even within 125 to 127. Because if you look at how it closed just above what is now the weekly pivot. The weekly pivot is around 1.2605, which suggests to me, and I'll tell you why, 126 will probably set the tone in the week ahead. The reason I say that, over the last 14 days, a big figure is traded every single day. By big figure, I mean 127, 126, etc. And that's 14 days in a row. It used to be a 90% sure pattern up until this year when low volatility really took its toll. But it used to be a big figure trade every day, and that was one of my favorite patterns. So on the start of the week, probably 126 is most at risk. It probably will print at some point. One word of caution about Mondays. They have tended not to be follow through days. We'll see if the stock market gets a breather, especially with U.S. holiday and Canadian and Japan markets closed as well. But one word of caution: we've seen some big moves take place on Columbus Day, not recently, but in the past. So don't be fooled by complacence. This is, the stock market, Treasury, and I think. And the currency futures are closed in the U.S., but the stock market's open all day. So just got to watch that. So now, if we look ahead, data is going to be a driving force, and how the markets react to data will give you a clue, because the Fed is now data dependent. We're looking at Germany, whose economy is really starting to crumble or slow down, and that's dragging everything with it. Now, one word about that. There used to be an old adage, and the adage was when the U.S. sneezed, the world got a cold, and vice versa. Now we're in more of a global world, and you can see what's happening. I said by the German slowdown and how that's affecting everything. It used to be the U.S. consumer could pull the global economy up by its excess consumption, but that's no longer the case as well, as the U.S. consumer is not that driving force anymore. So why the data is important is because of the Fed, and the Fed's going to react to data, and where the data has been outperforming recently. At some point, perhaps all this is what's going on is going to catch up to it, and the U.S. will underperform. In that case, that may take some of the bloom off the dollar, but we'll see. Maybe not for this month, but something you have to look out in the period ahead, because the market is now scaled back any expectations of a near-term Fed tightening. And whether they push it out the other way remains to be seen. But you're going to have to watch data for that. And in this regard, here's a great source of data. This is on the globalview.com homepage. It's also on the Forex forum. This is something I use every day when it's posted. It's called the Weekly Trading Planner. Not only does it give you the indicator coming out, plus a chart for it, but it also tells you what, whether it's significant or not. In that regard, we have right here, we have Draghi speaking on Wednesday, and we have Yellen on Thursday. Yellen is probably the more significant one, because how the Fed reacts to what's going on recently is going to be a key, and everybody in the market's going to expect a dovish Yellen. So therefore, perhaps that affects the dollar and keeps it from rising too far ahead of her speech. But that's something to look out for. And here's your full economic calendar, all these partial for the week, from Monday into Tuesday. And as you can see, on Tuesday we have German ZEW So that's the early thing. We have a full U.S. calendar after that. And then on, I said, Draghi on Wednesday, Yellen on Thursday. Now back to the market, back to charts, see if we can come up with trading ideas. As you can see here in the weekly chart, this was the key zone. We moved, we broke on the upside here. We didn't follow through. We closed below the lower end, so back below this level here. So it tells me at least 126.50, and I'll show you why in a second. To me, it's very important. It was the overnight low on Friday when it broke down. The euro really turned soft. 126 is very close to the weekly pivot of 126.05. So I would say that will be the bias setter during the week. If you look at a 1 hour chart, we're looking for trading levels. First, on the upside, you got your trend line here, and that's what I would use to start the week at 126.50. It comes in at the opening. You got 126.78, and probably most important, again, is 127.15. That was the high from the prior week. It was a breakout level on the upside here, and then was the high on Friday. So I'd say 127.15 is a key level on the downside here in my supports. 126.09 was Friday's low. 126.84 or 85, very key level here. You see, 125.42, less significant, but a support nevertheless. And the key one obviously is 125 figure to 10. And the upside is 127.91. So with the odds probably favor an inside week, with 126 probably setting its tone if we are to consolidate, and with the focus on stocks, maybe the currency market is not, and the correction from last week, which by the way broke 12 straight weeks of lower euro dollar closes. Perhaps that will cause the market to at least pause. Whether it pauses or not, remains to be seen, but I can make a case for a pause, and I'm probably looking for consolidation choppy consolidation during the week. As I said, with the market leading up to a full slate of U.S. data Wednesday, Thursday, and Yellen speaking on Thursday. So that's it for the week ahead. Overall bias still, at least in the euro dollar, is down. I still expect at some point to trade 120 to 125, but as long as 125 holds, we might be in for a little bit of a consolidation time. So that's my early look. I'll give a midweek intraday update. And as you saw last week, I nailed the euro dollar correction, called it dead on with my intraday update. I'll do that again. By the way, for those who want to see something really worthwhile, let's move this over here. Just click on this link here. It's 20 strategies I use in my everyday trading, and I'm going to share it with you. Just click on this link and you sign up for it, and you'll get your 20 strategies. So good luck and good trading.